fastest finger first, right? So the people who kind of get the answer correct in the first, they'll win. So yeah, that's to answer your question. But the questions are interesting, and even if you don't get the first three prize, after that we have a special announcement for 10,000 rupees. So yeah, you can probably stick around for that. But yeah, let's move on. So yeah, today we're going to talk about how to make money in stock markets fast, and I'll talk about what I mean by fast in the coming sections. But just to give you a brief, we're going to talk about more about money, what money is, how money is in the current ecosystem, who are the people who are making the most amount of money, and we're going to talk about some of the best traits that people have taken, which are purely based on common sense, and how did they, turned millions into billions in just a few days, weeks, or months. So we're going to talk about that. So yeah, I think let's move on. Let's move to the second slide.
Okay, I hope I'm audible now, at least.
Yeah, you're audible, Chandan.
Okay, Mohit, so sorry, so many discrepancies. Okay, so ladies and
No,
gentlemen, firstly, I must say, Mohit, firstly, congratulations again on raising $800,000. I mean, based upon the previous fundraise. At the same time, guys, the person who we have, Mohit, is from Bits Pilani. Yeah, that's obvious around Bluelearn community. More than that, something that is special about Mohit is he's the CEO and co-founder at Stratzy. Uh, this session is purely going to be about how to make money in stock markets faster. So, yep, let's get started.
yeah. So let's move to the next slide. Thanks for the introduction, Chandan. Excited to talk about this. So yeah, that brings us to our first major point, that what makes money. So there's a very clear ideology that I have, that being closer to money helps you make more money. Now I help you understand that, right? So let's think of it this way. In the government, right? If let's say the government or the Fed is printing money, right? Who are the people who are getting the money first, right? It is kind of the government, the banks, and then it trickles down to the corporations. These corporations have employees who then they then pay the employees, right? So what happens is people, organizations who are closer to the money or closer to where the money is being generated create a lot of wealth, right? Just to give an example, there are many product based companies, and it's very difficult to make a product, right? So let's say Tesla, it's very difficult to build a EV vehicle which is like this futuristic, right? It's 10 years into the future. It's very difficult to build it, right? But what happens with all these banks, they are making billions of dollars, and even the users don't understand it, right? The reason is, you deposit your money to the banks, right? So they are much closer to the money. They are closer to your money than you are closer to your money. Let that sink in for a second, right? Your money is with them, so they are much more closer to the money, even your money, than you are to your own money, right? So if I want to access my money, I'll have to go to a ATM, or take it out, or probably do a UPI. I'll have to put in pen and all. But the institution, the financial institution, they are much closer to the money, and that is what helps them make more money. And uh, and that is the reason, if we see the top billionaires, many of these billionaires are actually hedge fund managers, right? Now, what are hedge fund managers? Hedge fund managers are basically a group of small people who are handling the wealth for the ultra rich. So let's say a hedge fund manager, he's basically handling the wealth of the top multi-millionaires and billionaires in the world, and doubling, tripling their money by investing into stock markets, private markets, and all of these other instruments, right? And what happens is, because they are closer to the money, they're helping people make more money. They're earning enormously, right? And this is the stat right there: 25 highest earning hedge fund managers. They earned a combined of 26 billion last year, and these are individual 25 people, right? The hedge fund as an organization might have earned much more, right? So the hedge fund managers are one of the top paid people on the entire planet, right? And the reason for that is, they are closer to the money, right? Because they have the money of the ultra rich, the extremely wealthy people, and they're helping them make more money. So being closer to money helps you make more money. and that is very simple. And we have, and a different way to look at it is also through government. So the governments, what they do is they do many of the governments are very corrupted, right? And what happens is the government makes the money, the Fed prints the money, the banks institutions get it, the governments get it, the government employees kind of do corruption, they get all the money, and then it trickles down to us, the other people, right? So we are in the chain, we are the endmost people who get access to money, right? And that is why these people are making tons and tons of money. And that is what is there in the data itself. Hedge fund managers are earning tons of money every year. So we're going to talk more about it, about this concept, and how are they exactly making such great amount of money, right? So yeah, so let's move to the next slide, Chandni. Yeah, and this is the answer to it. Like most of the hedge fund managers out there, they use their common sense, right? And you don't need a degree in economics, you don't need a degree in extreme quantitative finance or something to actually make tons of money. Even if you have a good common sense, if you have a good understanding of how the world works, you can make a ton of money. And that is what we have seen in all of these hedge fund managers again and again. Most of these managers, they didn't had a financial background. They came from various other backgrounds like humanities, arts. One of the biggest hedge fund managers was actually a cobbler before he started off. But this was the early days, right? And he went into this whole journey of becoming a hedge fund manager, and then kind of topped it, and then made billions of dollars for him and the investors and all of them. And that is what makes this easier, right? Because people from all sort of background can come and they can thrive in this ecosystem, right? So initially, stock markets were for the extremely wealthy. Like you and I, we couldn't even get access to place trades in stock markets. Now it has been democratized. Everyone has the access to it. And the thing here is the playing field is level, right? So what I mean by that is, let's say if if you want to become a neurosurgeon or a quantum scientist, the best quantum scientist in the world, right? You need access to tons of instruments. You need access to labs, like high grade labs, so one of the best labs in the world, where you can create colliders, where you can do experiments and all sort of these things, right? Uh, but with the capital markets, all you need is a laptop connection, right? You just need a laptop. You need a good broker and all of those things, and then you are in the same level playing field, at least for now, right? So you can even buy stocks, they can buy stocks, you can sell stocks, they can sell stocks, and you can buy futures, you can do all sort of financial instrument trades, they can also do it. So the playing field is much more level here, and that's why people from such extreme humble backgrounds have come and thrived in this industry, right? They went on to become the top hedge fund managers, people who were like people who were not that amazing. So what I mean to say is, people from any kind of background, people from any kind of history can come and thrive in this industry, because this is what it takes to thrive in this common sense. And we're going to talk about some of these traits, and let's look at some of these traits, and then you'll see how interesting it can get, even if you just have a understanding of how the world works. So yeah, let's move to the next slide. So what we're going to do is, we're going to talk about couple of big traits that some of the biggest hedge fund managers did. So first of all, I'm going to talk about George Soros. So George Soros is a very big hedge fund manager. Now, just to give you a background about this guy, he was in Hungary, and the Nazis took over the Hungary nation, and he couldn't go to school at 13, 14 years of age. He couldn't go to school because the Nazis were there, and even though his parents were quite well off, but they had to come back. They had to come back to different countries. So he couldn't get access to education in the early days. Then he did study philosophy, right? So he did study. So he left his country 14, 15 years of age, had no study. He worked very hard. He got into London School of Economics, but didn't study economics there. He studied philosophy, right? Philosophy is easier to get in rather than the main subject there, the economics and stuff, right? So he studied philosophy, but he couldn't land jobs, right? Because who want to hire a philosopher, right? Because all philosophers do is just talk about abstract things. So he went on to sell random things, right? So he has sold like very fancy things like lockets and all of these things on the seaside. He has worked at a restaurant and all of those things. And now he is one of the biggest hedge fund managers out there. His net worth is 8.6 billion, and even though he has kind of donated 32 billion already, so 32 billion is already donated. Right now, his net worth is 8.6, and he has made tons of money. We're going to talk about how he made 1 billion in a single day, right? So 1 billion is like a very big amount for all of us. Like if 1 billion is divided among all the people in this webinar right now, we would be super filthy rich, right? So so he made that in just one day, and we're gonna understand how he did that. And this is just to kind of help you understand, how do they come up with such traits. So this is called the breaking the bank of England. This happened long back. What happened was after the World War II, right? The World War II was basically a war between the European nations, right? And what happened after the World War II was that all of these nations combined and they understood that, we cannot keep fighting among ourselves and we need to unite our economy. Otherwise, we'll keep fighting among ourselves and then we lose to all the other people or all the other countries in the whole earth. And that is why they started to unite, right? And that is when, Europe created a organization which is now known the European Union, right? And a mechanism was introduced, ERM mechanism. This mechanism meant exchange rate mechanism, which basically mean, okay, we all of the different countries, Germany, Hungary, UK, and all of the other people in the Europe have their own currency. But what we'll do is we'll create a single exchange rate, right? And so if anyone wants to convert the currencies of Germany to some Netherlands, you can do it through the fixed income, the fixed exchange rate, right? And uh, and this was a step to kind of get into the unitation of the European economy. So this ERM was introduced, right? And UK or the England was not a part of it initially, right? So the one of the biggest politician there, Margaret Thatcher, who's a very famous historical personality. She was not fond of this ERM system, and they never participated in this. So England was kept out of this, but all the other nations were still in that, right? And what happens was, uh, during certain late 1980s, the inflation starts rising in the England, and then they feel that, okay, we need to unite with the other nations of the European Union to kind of help stabilize our economy, right? And that is when new political leaders came in and they forced England to join the ERM, right? Now, what happens here is, because the exchange rate is fixed, right? So what that means is, if anyone is selling pounds, a pound is the currency of England. So if anyone is selling pound, the Bank of England has to keep buying it just to maintain the same rate, right? Because they cannot let it fall because the exchange rate needs to be the same. That was the ERM mechanism, and this put a lot of pressure on pound. So and Soros, he knew that this thing was not sustainable. That, England cannot be a part of ERM much, for too long. And what he did was he kept shorting the pound, or what he did was he keep selling the pound in order to kind of make the Bank of England let it fall, right? So what I mean by that is, let's say if we already know that, no matter how much pounds I sell, the Bank of England will keep buying it, but there's a threshold to it, because I know that, they cannot keep printing those pounds, because the moment that they keep doing, the inflation keeps rising, right? And that is exactly what happened. So Soros was a very smart guy, and he saw through that, that the UK cannot be too much longer in this ERM system. So he kept shorting it, he kept selling it so that the Bank of England would buy it, till a point where it became an economic catastrophe for them, and they had to accept that we will have to let the pound fall, or their currency have to fall, and they had to get out of it. So this is what happened there, and he almost made $1 billion in a single day, and just so he had a position of $10 billion by the time the markets opened at 8:30, and then all the government officials were talking to each other that what should we do about this. Till 9:30 they bought 1 billion, till 10:30 a.m. they bought 2 billion more, but it reached to a point where everyone in the world kind of went on with Soros and joined him in this trade, and at that point they understood that there's nothing that they can do, and and the reason that this is a very important phenomena, even if you don't understand the jargons of it, is because it's like fighting the Fed, right, and winning against it. So Fed, RBI, Bank of England, these are the biggest financial institutions, right? So if anyone can go against them and still make money, that shows you how much the playing field is level, right? So that is what I wanted to kind of express upon, that a person who didn't get access to good education kind of made his way and went on to become one of the best hedge fund managers, just because he was closer to the money. He had access to so much money because of the hedge fund that he was running. He was able to win against the Bank of England, right? And that is what happened there. So that's a very interesting phenomena. I would say go read more about George Soros too. This was just the introductory thing. So yeah, let's move on to the next slide, and we'll talk about one more great trade. So this is 2.7 million, which got turned into 2.6 billion in just 30 days, right? So Bill Ackman was the hedge fund manager here. He's a hedge fund manager of Pershing Square Capital. He's a bachelor in arts, right? So no one would expect him to know all of these stuff, and that is what brings me to my first point. That what you need to kind of thrive in this system is common sense, right? So that's very interesting. And what happened here was that back in 2020, when the pandemic was starting, he kind of spotted that people are not taking the corona virus as serious as it is, and he kind of went through the research reports. He saw the rise in the cases, and he studied the previous pandemic to understand that once the pandemic goes above a certain threshold, the network effects of these pandemic are much higher. So he understood that more than 50% of the population uh, will get the virus, and the governments will declare it as a pandemic, and they'll have to keep us in our house and do the quarantine and all of those stuff. So he understood this, and what he did was he went on and created a position using credit default swaps. Now, what are credit default swaps? And as I said this at the start of the presentation, people who are closer to the money, the financial institution, they create such exotic instruments, such exotic financial instruments, and derivatives, and all of these instruments to kind of make more money, right? Even with small bets. So this was a 2.7 million bet that he took, which got turned into 2.6 billion in just 30 days. So he understood that the markets are going to go down because of the coronavirus pandemic, and people haven't understood it. And he bought credit default swaps. An easier way to understand credit default swaps is that I'm buying a insurance on a house that I don't even own, right? So what I mean by that is, let's say if I have my house which is worth 1 cr 1 crore of rupees, right? And if I want to buy insurance on it, right, the insurance would be worth 1 crore, 2 crore, right? If it gets paid. Now what happens in credit default swap is, even if I don't have a 1 cr house, I can buy the insurance for it, right? So even if I don't have the asset, I can buy insurance for a house, and then wait for it to get on fire, so that I can make 2 cr worth of money, even if I don't have 1 cr to buy the house, and even if I don't have uh, huge sums of money. So now think of this in a large scale. you can buy insurance for 10,000 houses worth 1 CR each, and you don't even require 10,000 CR to buy those houses. You're just buying the insurance for those houses and then kind of waiting for them to get on fire. And that is what CDS or credit default swaps are in a nutshell. These are very exotic financial instruments created by the people, by the institutions, to kind of help people make more money who have the risk taking ability and who have the common sense to understand how to go about this. So this was interesting. Bill Ackman, legendary hedge fund manager, and he made 2.7 million turn into 2.6 billion, 100x in just 30 days. And we can never imagine doing such a thing, right? And the reason that they are able to do this is they're closer to the money. They understand the financial systems. They are much closer to where these exotic instruments are made, and they're taking benefit out of it, right? So the people who lost so much money, like I remember 2020 pandemic, most of us were many of our parents lost job. Many of the grandparents and all the generation died. People were suffering so much, but the institutions, uh, the people who were closer to the money were making tons of money. The reason is, when the pandemic struck, the government was printing a lot of money, and where does this money land, right? It comes to us at the end because we are at the end of the chain. The first thing that it goes to are the banks, the financial institution, all of these hedge fund managers who have the money to kind of play on those exotic options and make such amazing returns. I mean, turning 2.7 million into 2.6 billion is no ordinary trade. So yeah, so that is what it means. It's okay if you're not able to understand the some of these parts. That's fine. This is just to help you understand. Someone from such humble background, someone by just using such um, common sense can actually create so much wealth for them because they are closer to where the money is being made, and they have the risk taking ability, and they understand the financial markets, they understand the stock markets. So yeah, so the next we have three questions popping up right in front of you, and we'll give everyone like a 45 seconds to 1 minute. So everyone just, as soon as you see it, just write out the answers. So there'll be four options, A, B, C, D. And whenever you find the answer to something, so let's say the answer is AAA. So you have to type in AAA into the chatbot, and then we'll select the winner at the end of the presentation. So yeah, there'll be three questions popping up right now. Yeah, so guys, feel free to just read through it and give your answer. So Bikash is asking which slides, which tool did I use? This is pitch.com, pitch.com.
Guys, just a suggestion. I mean, answer all of them at once. That would be really good. Yeah.
30 more seconds. People just type in your answers, and even if you're not able to get it, don't worry. We have seven more questions coming in towards the presentation. Yeah. Yeah, I think we can move on, Chandan. No worries, guys. If you're not able to get it, there are seven more questions coming in, so you still have a chance to get the top spot.
Sure.
Yes. Yeah. So now I think most of you must have heard of this, the GameStop saga, what happened there, right? And there is no better incident to tell you about the importance of the level playing field than this itself. Retail investors going against the biggest hedge funds out there. The reason I want to share this story is because this shows how much democratized the playing field is right now. And as I said, right, you can have just a common sense, and you don't even need a big background or something. People from such humble backgrounds have come and thrived in this industry, and went on to become such do such amazing in this system, and created a lot of wealth for everyone. So we're going to talk about this, and we'll see where it heads. I'll tell you the whole saga, how it kind of raveled into. But it is very important to understand this is one of the most insane moments in the financial history that we have gone through, right? And this is the story of how general retail investors beat the shit out of the biggest hedge fund managers, right? And what happens here is, during the pandemic, lots of money was created, and as we saw in the previous trade, Bill Ackman made turn 2.7 billion into 3 billion. Similarly, many hedge fund managers, they made lots of money, and these hedge fund managers, it's a very small community. They are like top 1,000, 1,500 people, 2,000 people who are kind of given the power of such amazing wealth, right? And they are trying to create more wealth out of it. So what they did was, there is a stock called GameStop, right? What it does, it sells CDs, game CDs, right? And during 2020 pandemic, there was this whole narrative that things will digitize so more, right? Like, as in, everyone was at their home, and I remember we have seen the edtech boom at that time, and that time many VCs put so much money into edtech startups, thinking that up to everyone will be staying at home, so we'll need people to kind of build these ecosystems, because everyone will stay at home for the longest time, and then we'll need such products. So many of these hedge fund managers, what they did was, they kind of went against the GameStop, and they said, GameStop, because they sell digital CDs, they'll not be making so much money. What they did was, they shorted the stock. So what I'll tell you what shorting means. So shorting a stock means that you make money when the stock price falls. How does this happen, right? So when you buy a stock, if the price increases, you make money. But while shorting, if you short a stock, even the price decreases, you make money, right? And how that works is, let's say we have a phone, right? And I say, what I can do is, I have an iPhone, right? And I say, I think the value of this iPhone is going to decrease in the coming years, right? So what I'll do is, I'll borrow an iPhone from my friend, right? And I'll say, hey, I've taken one iPhone from you. I'll give it back to you after 1 month, right? Right. I said to him, I'll give it to you after 1 month. Just let me borrow it. I'll give you 100 rupees for letting me borrow it. So I borrow the iPhone from my friend. I kind of sell it into the market. and the price at that time is 70,000. So I sold the iPhone at 70,000, and then then my prediction turned out to be true, and the price of iPhone started falling, and it went down to, let's say, 40,000. Now what I'll do is I go to the market again. I'll buy that uh, iPhone for 40,000, and I'll give it back to my friend from whom I borrowed it, and I'll say, hey, here's your iPhone. I'm giving it back, and here's 100 rupees. I said I'll give you for letting me borrow it. But meanwhile, I just made 30,000 rupees, right? Because I sold it at 70,000, bought it at 40,000. So as Priyansh is saying, right, sell first and buy later. So that's right, you know. And many hedge fund managers went against GameStop because they said everything is getting digitized. The games will get digitized. No more people will be going to shops to buy games, and they shorted the shit out of the stock. It went to a few dollars, right? And then an amazing thing happens, right? And this will tell you this will give you a sense of how the playing field got leveled, right? So what happened next was there was this community of Wall Street bets, as Bikash is saying, you know, the power of the public. The community at Wall Street bets, one of the person there, it was a very small community initially, but one of the persons there, he researched and he did a lot of research, and he found out that, you know, the digitization of gaming will not happen at the pace that these people are thinking, what the hedge fund managers are thinking, and these hedge fund managers are wrong, right? So what we can do is, and these hedge fund managers, they have sold a ton of GameStop Saga, GameStop stock, and what they've even done is they've went over and above to kind of borrow more and more stock and sell it, because they are expecting the price to decrease. But this guy, he says, you know, no, this doesn't make sense. You know, the hedge fund managers are wrong, and this is not the fair price of this stock. What we can do is we can short squeeze them, right? So at that time, these people felt that, you know, GameStop was at the brink of bankruptcy. The hedge funds thought about that, but these retail investors, when they put out those Reddit posts, they did detailed analysis, and they said, you know, hey, they have so much of cash, and the digitization of gaming will not happen in the next 5-10 years. It'll take a lot more time. So their narrative is wrong, and, you know, we can short squeeze them, right? So what does a short squeeze mean? And this is a very interesting phenomena. So what happens in a short squeeze is basically, let's say there are 1,000 people, there are 1,000 yeah, so let's go back to the iPhone analogy, right? Now what happens is there are 1,000 people who are saying of the price of iPhone is going to fall, and everyone has borrowed from their friend, right? So let's say I borrowed from 1,000 of my friends and sold the iPhone, right? Now what happens is, instead of falling, the iPhone price went from 70,000 up towards 90,000, 1 lakh, right? Now all of my friends are calling me back. Hey, you said you'll give me my iPhone back in 1 month, but you're still not giving it. When will you give it back, right? And the thing for me is, I thought the price will drop, but the price is increased right now. So what I'll have to do is I'll have to go to the market and I have to buy it for 1 lakh, right? Which is a loss. But at the same time, because I'm buying it for 1 lakh, the demand for the iPhones are increasing because I'm buying 1,000 iPhones, and that's why the price will increase more. So that is basically what a short squeeze is. That, you know, all of these people, because they have borrowed the stock, and the people that they have borrowed from are asking back for the stock, they'll have to buy it from the market at extreme prices and then kind of give it back. And the position that these people had were were very large, right? So, and you can see that, you know, $70 billion worth of losses were realized by these hedge funds, and all of these 70 billion has kind of, you know, went into the pockets of various other investors who kind of targeted this. So basically the community, they said, you know, let's together combine our forces, buy the stock, so the price increases, and once the price increases, they will have to buy more, as in they'll have to buy the stock again to give it to the people that they have borrowed it from, and that will drive the price more. And this is what happened, right? And after a point of time, there were not just retail investors, there were big investors, sharks coming in too, and they also made tons of profit on this, right? So again, you know, a great example of how the playing field has leveled so much. The technology has kind of democratized the access to stock markets and all these financial instruments for all of us, that it has given us the opportunity to even play or even win against the biggest hedge funds out there. And that is what is truly something that we have been seeing in this saga. So yeah, let's move on to the next part. So these are three traits which I just wanted to share with you, because these are traits where people who are closer to the money have kind of made so much enormous sort of money by just using common sense, right? So very interesting that anyone from any kind of background can come and they can uh, create money in the stock markets, and stock markets are a leveling field, right? So the retail investors kind of went against the hedge funds to win such 70 billion worth of money, or monetary value was gained by these people. So it shows how the level playing field are the stock markets, right? The stock markets and all of these other investment where the money is are the places where there's an opportunity to level the playing field. So then what are stock markets, right? So it's basically, you can think of it like a system which was created by people, and initially the wealthy people, to kind of generate more wealth for them, right? But now it is democratized. Stock markets are risky, right? It's foolish of people if they think it's not risky, but then many things are a risk. Like every decision of us are a risk, right? So for all of you in colleges, you might be thinking, should I go for a development job? Should I go for a product management thing, right? If I let's say you go to a product management role, but then the demand for it kinds of dies out, right? So every decision is a risk, right? So risk is I see it as synonymous to life, right? But don't let it fool that anyone can come and they can make money. Of course, there are losses. People lose money every day in stock markets too, right? But the people who come up with the common sense are ultimately the one who come out as winners, right? So and stock markets are the leveling field. So uh, if you come from a very humble background, very like, you are not closer to the money, right? You're not the government official, you are not the people working in the financial institution holding the power of what to do with the money. We are much at the end of the value chain, right? So this is a level playing field for all of us. So yeah, we can move on to the next slide. And yeah, so how to succeed? I think money, stocks, investments, finance, all of these are very important aspects of our whole life, right? Like, think of many people who do jobs they don't love, you know, go through such hassle of going to IIT JEE just so that they can get that 1 CR of package, right? That's the end goal of most of the people out there, right? And money is such an important part of our life that we cannot neglect it, right? Like, neglecting it or even not learning about it is a step behind, right? So and you want to make sure that you're not falling a step behind, because the moment you fall one step behind, as we talk, like, the wealth disparity is increasing, right? So people who will be left behind will be left behind a lot. The people who go forward, the people who are getting wealthy, they'll get wealthy more, and that's why the wealth disparity will happen a lot, even going in future. And that is what we have seen. The top people of the world holding more wealth than the 99% of the people out there, right? So and this will keep on increasing. So the first thing that you need to do is learn the basics. You cannot neglect the basics. You cannot uh, neglect it, because money is such an important part of our lives in itself, right? And just learning about these instruments, right, will help you understand how the financial institutions work, how the monetary system works, and you will even at the end of the day, I'm not saying all of you need to make billions of dollars, but what I'm saying is, the moment you don't learn the basics, you are going one step behind. So it's very important to learn the basics, right? And the other way to look at it is, India is just getting started. We are a very small economy right now. Our market capitalization for all the stocks is, we are ranked fourth in the world, and we have room to grow 10x, 20x from here just to match with the market capitalization of all the US equities, right? So there's a lot of growth that will be happening in India, lots of innovation that will be happening in India, and if you can be a part of it, it'll be good for you, right? Otherwise, uh, we might fall one step behind. So yeah, that is what I wanted to just focus on here, learning the basics and all of this stuff. Now we have three more questions coming in, guys. So yeah, let's do these three more questions. So people who didn't get the chance to do it last time, focus, and yeah, we have 2 minutes. Some of these jargons might be not understood by people, but then this is just a fun game to just understand how you can think about these questions. So just yeah. Yeah, I think we can move ahead. And people who couldn't get this, the the end game is coming where we have four questions. So four questions are like 4 points. So that's the it can change the results if you can just crack them, and those are much easier to be honest. But yeah, let's move on. I think we have passed 3 minutes. Yeah. So to summarize, in the end, I'm just giving out a few recommendations, few movies, books, documentaries that I would love for you guys to see. The Big Short, 2008 financial crisis, the subprime crisis that we saw. So you can see what happened there. Betting on Zero is actually on based on Bill Ackman. Bill Ackman, the person I told you, the second trade turned 2.7 million into 2.7 billion. So in this documentary, he's basically shorting Herbalife. Herbalife um, I think you all must have heard of Tupperware. Many of our mom generation used to sell Tupperware, right? And it is sort of a Ponzi, but then what Bill Ackman did was he was shorting this stock of Herbalife, and there was this other big hedge fund manager who was buying it, and he was going out on uh, and publicizing his short position, but then it didn't turn out to be well for him. But then yeah, it's a good documentary to have a look at. Stock Market Visits, the best book to get interested into stock markets. It's interviews. It's like a sort of interviews by the top traders and their investing methodology. And when you read this book, you'll understand, how did they land up there. Many of these people had no idea what the financial world was. They had no idea what stock markets were, and still they kind of thrived in it. And you can say it was kind of luck manifested into them that they landed in this space, and many of them like lost a ton of money before they went on to win big money. And I remember in our Bits Wall Street Club, when our seniors used to teach us, they used to say that the money that you lose to the stock markets are like fees that you're paying to them to learn about the stock markets, right? So people lose money, but then the important thing is to keep learning and keep getting better there. So the money that you lose initially is just like a fee that you're paying to these people. Billions, amazing TV show, kind of will give you an overview of the hedge fund industry. How do hedge funds work? And it's a fun thing to watch. And instead of watching some random show, you can have a look at this maybe. Reminiscences of a Stock Operator. One of the best traders, Justin Livmore, he made a ton of money in his lifetime, and then he even lost all of it, and then the whole story unravels in this book. And then, of course, yeah, the Cold Fusion YouTube channel. I love that channel. There are lots of information out there, not just about finance, but about everything else also. Finance is actually a small topic there, but there are lots of other things that they talk about: space, technology, innovation. And you can have a look at the Reddit versus Wall Street thing there, just to give an understanding of what happened there. But yeah, let's move on to the next. Yeah. So is investing in, so there's this question by Varun. Um, because everyone knows about index funding, I think they will figure out the way to keep the index fund a range where we can expect more than. Yeah, so it's the most intelligent thing if you don't want to get into learning more about stock markets, right? So for people who are not interested into such stuff, for them the best option is the index fund, and that is there. But people who are interested, people who want to get ahead more, right? People who want to kind of know more about this industry, for them there are other options for sure, right? The rich finds. So like the Pershing Square holding, the hedge fund of Bill Ackman, they annualized 55% returns, whereas S&P annualized 7 to 9% returns, right? So you can see the enormous difference between these two returns, right? And and they don't buy index funds, right? So these hedge fund managers, they have a small portion of their portfolio maybe into index funds, but they don't bet on these index funds, right? So yeah, Jim Simmons 66, so amazing. So guys, as you all know, Strategy. I'm the co-founder of Strategy, and Strategy, we built this. The reason for building this was because when I was a child, I I used to, we used to sit around in a dinner time, and we never used to have conversations about finance, stock markets, and all of these stuff, right? And I think the reason for that is being born in a middle class family at that time, making money from money was so magical for us. It was like it was like something which cannot happen. So like fairyland, dreamland for us, right? And people in India, especially the middle class, I think they don't talk much about these stuff, right? It's like a taboo to talk about money and all of these stuff. And the reason we started off this was to make it easy for people to get into it, and making it easier for people to kind of have more conversations around it. And our end goal is, if people all around the world all around the India for starters can sit with their parents and have a dinner time conversation about these things. We think we have reached a certain aspect of their life which was initially considered a taboo. So that's why we started it off. Uh, Now you can come on to strategy. I would say just even by reading the ideas, you can learn a lot. Now, what are ideas? You know, these are like single stocks with the analysis, with the thesis of why it makes sense to invest into them. So just to give an example, if we go back to pandemic 2020, every doctor in India was prescribing paracetamol. But there's a company in India which makes the chemical required to make paracetamol. It's called IOL Chemicals. And our research team saw that, the ibuprofen, which is the chemical required to make paracetamol, the commodity price of it was rising. So we wrote it there. Our investors saw it, then they invested into it, and the stock price doubled, tripled in a couple of weeks. So we basically are like your investment team, right? We put out our research there. You can see you can invest into those things, and you also get access to other features like TechBuzz, StockBuzz, and then you can do that. So this is the way to get the 10,000 prize. Go to strategy, open a strategy trading account. It's free to open. All you need is a PAN card. You can just go there. Then there's a My Club section. In the My Club section, you have to use the code launch party. So I'll just type in here launch party. So you can just join this club, and then we're giving out 10,000 prizes to everyone who tops the leaderboard every week. But the thing here is open up. Yeah, it's on app. We are app first company, so you can just write out strategy and you can check it out. And then uh, the best thing about this prize is it doesn't depend on the capital that you invest. It's basically based on the percentage return, right? So what happens is even if you are investing, let's say 500 rupees, but your percentage is 10% in a week, you, you'll get the 10,000 prize money, right? So you don't need to put in 10,000, 20,000 or tons of money. You can get started with as low as 100, 200 rupees. And then even after that, you can top the leaderboard and make money out of it. So that's the idea there. Yeah, Priyansh, as mentioned, right? Warren Buffett, yeah, definitely, he's a veteran, right? He has been doing it consistently for the longest time humankind has known, and the compounding has surely, been there. 4 5 years on the list, all 40, we have not been more than 3 returns. Because if we remove 4 5 years on the list, already last 40 years, we have not been more than 90. Unable to get this bubbles. And one was the man. Okay. If you're talking about the faults, then the biggest money by some of these institutional hedge funds and these people were made during crashes. The reason is crashes happen in a very fast way. So if you see and you see where when the markets fall 20%, 15%, or 10%, you'll see it happened in a very short span of time. Whereas to increase the same will take a lot more time. So people who made tons of money actually betted on this crash, and because that is actually the moment when you can do it. So I would say watch Big Shot. Amazing how they made. I think that hedge fund manager made around $4 to $7 billion on that credit default swaps that he took. Uh, yeah, Priyancho, for 100, 200 rupees, you'll be only able to buy, let's say, 1 2 stocks. But then the leaderboard is based on the top, uh, on the percentage. So even if for 200 rupees you're making 20 rupees, the percentage is 10%. So if anyone is invested 10,000 rupees, they're only able to convert that 10,000 into 10,020. Your percentage is higher, so you'll top the leaderboard. Harsh, yeah. So so coming to the topic of the session, right? How to make money in the stock markets fast. The thing is, this is the fastest way to make money other than all the other options that you have, right? So as I said, right, 2.7 billion converted into 2.7 million converted into 2 billion, and all of those things happen, right? But yeah, but there is no. It's not like like you can start today and you can become a billionaire after a year or so. Right? It'll take time, but people have come from very humble backgrounds and then kind of went on that path and learned so much. So yeah, this was more about uh, helping you understand how these systems work, right? How the ultra rich have made their money, and giving just some of these trades, some of these insights into how do they think and all of those things. Yeah, but yeah, I hope it was useful. But yeah, we can move ahead. We have 4 more questions coming in, guys, or the last 4 questions, and then the prizes will be distributed to the top 3 people. So yeah, let's move on to the next slide. Yes. So I think we can take 3-4 minutes for this. Yep. So last 30 seconds, I think then we can move to the final part. Yep. So I think, yeah, we can. But yeah, guys, if you're not able to get any of these answers, don't get disheartened. This was just a fun event that we wanted to have with the Bluelearn community because, I personally always enjoy communication or, just interacting with Bluelearn community, getting to know such amazing people and, seeing seeing the work that you all do, seeing the uh, kind of energy that you have for learning more and more. It's something that I wanted to have. Like I would have been very glad to have that when I was in my college. So yeah, so don't get disheartened if any you couldn't get answers to any of these. This is just a fun event that we wanted to have. Yeah, and then the next last slide we have is of Q&A. So if you have any questions, anything you want to discuss about, we can go forward and have a discussion on those topics. So I think answers. Bluelearn team will, I think, communicate the results and the answers in the Discord.
Definitely, we will do that.
Yeah. Yeah. So I think let's move to the last slide, which is of Q&A. So yeah, any questions? The club invite code is launch party. I'm just typing it out again. Yeah, Varun, we will get into crypto, not at the like very no, not in the coming months, but it's in our pipeline. So we are working on it. It'll be out there. Which parameters do you prefer for valuation? There are various parameters, and there's this amazing book by Peter Lynch, One Up on Wall Street. I think just to give an example, how it did the valuation for one of these companies was, let's say there are various ways to understand if it is undervalued or overvalued. One of the ways was, let's say the company has a stock price of 30 rupees, uh, which is giving it a market cap of, uh, let's say, $2 million, let's say, right? For example. Now, if the cash itself in the company is $3 million, it's surely undervalued, right? Even if they have some debt, but if those are long-term debt which were used to kind of create business, uh, it is undervalued because the company itself has more cash than the market cap, right? So there are various ways to look at valuations, right? And there are two ways people kind of invest, right? One is valuing in after modeling for the growth, right? So there are high growth sectors where I can model high growth. So like EVs are a very high growth segment, and that's why the Tesla is valued so much by these investors, was because they're already making such good amount of revenues, and the expectation is that going forward they'll take the market share out of all the other non-EV automobiles too. That is one way. The other way is to kind of find the hidden gems. We also have a strategy called hidden gems. I would say, go to strategy, look at the hidden gems strategy, read about the description there. There are certain metrics which are mentioned there for valuations too. Option strategies. So maybe option strategies are good, right? We are actually coming up with options soon on the platform too, and it'll be like a very easy way to get into options trading, right? Created especially for the millennial Gen Z population, and it'll be a feature where people can kind of visualize and analyze options in a whole new perspective and a very easy perspective. And so our whole goal is that while people invest and trade, 90% of the time is the analysis part, 10% is the execution part, right? So we're saying ki if we can save people time and effort into the 90% of the analysis part, right? Because we solve for analysis, we solve for the research, and kind of help you cut down the hard work on your investing and trading, and that is there. So option strategies are coming on the app soon too. but yeah, options, they require higher margin, but so the more complex the financial instrument, the more risk to reward is there, plus the more ways to make money on top of it. So like credit default swaps are extremely complicated, right? But you need credit default swaps to turn 2.7 million into 2.7 billion, right? And similarly with options, those are complex, but these instruments are vehicles which are used by many hedge fund managers and all of these people to actually make more money. Which is better, crypto or stocks? So I think it's not about which is better, but it's about what fits in your investing style, what fits in your risk profile and all. So let's convert this question into what is better, Adani or Reliance? So if I'm a hedge fund manager and my investors are expecting me for a more stable return, if my investing style is more stable returns, um, and more stability, I'll go with Reliance. But if I'm a kind of a hedge fund manager where I'm focusing on growth, I'm focusing on doubling my money and all of those things, then probably Adani is a better stock for me. So similarly, the same thing with crypto or stocks. I think both of them have their own merits and demerits. So you need to look at all of those things. I used to trade options, Priyansh. I used to do options trading, options selling, expiry selling, and we used to have various modeling strategies. So there are options pricing models which you can use to find the fair value of an option, and then accordingly you can place trades there. So it's interesting. You can have a look at it. What can be the thumb strategy in IT companies? I didn't understand the question, but thumb strategy in IT companies. IT is a growing field in India, right? So the top IT companies right now, they're mainly services companies. So like TCS, Wipro, all of these are services companies, right? So what happens there is um they basically have big clients in US and all the other countries, and that is where they get the deal flow of. So if there are certain companies who have good number of customers, so let's say Infosys, and they have big customers, let's say a bank in US, a big let's say Walmart in US, and all of these other things. They have HDFC Bank as a customer in India, TCS, right? So if they have a strong book of customers who will be able to pay them for the longest time, it's good, right? I'm talking about the Indian IT companies, right, which are mostly services based. So having a look at the customer base, the kind of deals that they are getting, and the longevity of the deals, how long can it last? All of those things are kind of important. Is recession
Mohit,
coming?
I have one question.
Yes, Bikash.
Yes, and if you don't mind, I was wanting to know that what is it that you are going to offer to your users apart from what giants like Zero the Halfstep or Grow are offering? What is your USP?
Got it. So our USP is that the broking apps, they're created for extreme traders, investors, right? They're kind of built for people who know what to do, and then it's just the execution part, right? But the research and everything, you have to do it. So let's say for a simple example, you can open in a broking app, you have to open a chart, you have to understand how to read a chart, you have to understand the technical analysis, all of those things. We have a feature called TechBuzz, where instead of doing all of the hard work, we do the hard work for you, right? We automatically tell you which patterns are being formed in which stock, and we kind of solved it from a first principle that why do people look at charts, and we figured out that acha, they look at trend, speed, and volume and risk, and we kind of quantified them in a simple manner. So now you don't need to look at the chart. You can look at the tech buzz. So tech buzz tells you the stocks which are buzzing technically, and then you can pick those stocks. You can see, okay, which pattern is being formed on these stocks. What is the trend, speed, and risk like compared with all the other stocks? So instead of you going out and researching, opening charts, putting in time and effort into all of those things, we solve the analysis and research part for you, making it easier for people to get in. So our idea is to increase the inclusion in these things, right? So I think we are very privileged given the sense that we have an understanding of all of those things, but there are various other people in India that don't have access to such things. So our overall goal is to kind of lower the threshold for entrance into these things. So we are like a neo broker, you can say. So you've heard of neo bank, right? So what do neo bank do? They're a layer above a bank. They work with a bank in a backend, and they solve for us a specific utility. Similarly, we are a neo broker, so we work with brokers in the backend, but we are built on top of them, and we are solving for all the other things there.
And one more thing, if I can
Yeah,
ask.
yeah,
And
go
you
ahead.
also mentioned that you are having plans to launch crypto into your platform. But majority of the cases I have seen that those who are in favor of stock market, they are not in favor of the crypto market. And you might be aware the recent fall that the crypto is going through. And even Rakesh Jhunjhunwala or Warren Buffett, they all do not support crypto because they do not have a backing. But we, being in the technology space, we know that there is something. But how do you? What is your point on that?
Definitely. So my understanding of it is, whenever a technological disruption comes, many people might not agree with it. So I remember seeing this video of Elon Musk where he kind of he was in tears because of the previous astronomers and all, like Neil Armstrong and all of the big names in the space industry. They didn't approve of what he was doing. They thought it was not possible, right? So of course, people who are not a part of the recent technological advancement and the ecosystem, they will have their own doubts. They will have their own questions. But all these doubts and questions are good because they'll help frame the regulatory aspect of these things better, right? So at the end of the day, these will help the government to form more and better regulation. So I think, yeah, I think every time people will have believers, disbelievers, and but yeah, that's the way things work, right? Also, guys, just wanted to emphasize that the 10K prize money would be on the launch party My Club, which you can join on the Start the app. But I hope because that answers what my opinion is there. That there
Yes,
always
yes,
will be
definitely.
disagreements whenever a technological advancement is being made.
Uh,
So yeah,
If I'm allowed to ask, can I ask one more?
yeah,
Or
yeah, sure,
yeah,
sure.
you know, yeah. So actually, I was curious about your business model. As you mentioned about there are only 13, 28 people out there. Okay, so you mentioned about that. You'll be having this community wherein only the leaders of the top leader will be earning, and that will depend on the capital that he has invested and the amount of return that he has generated, and that will only determine his chances of winning. Is it?
I didn't get the question.
Means you told that the 10K prize that we are talking about, the leaderboard one, that those people who has generated the highest return onto their investment will be on the will be on the leaderboard, right?
Correct. Yeah.
Yeah, and that in fact interprets to that he has to do higher number of trades in order to be there,
Not
right?
necessarily. No, not necessarily. So
But you are
if yeah, even if you do one trade and you're able to get 10% on it, you can top the leaderboard. And actually, the more trades that you do, so the way that the percentage is calculated is basically the average percentage return on all of those trades, right? So the more trades that you do will make it difficult for you to increase the average PNL of your performance for that week. So you don't necessarily need to do more trades. Even by doing a few trades, if you're able to get more percentage-wise returns, you can come onto the top of the leaderboard.
okay. And I believe from this strategy, your target audience or your target customer is those budding entrepreneur, means those budding
Correct.
individuals who are into stock market just recently or are even curious about. Mm.
Yeah, correct. So we're looking at the middle of the spectrum. People who are making the transition are in the education phase, learning about things, and making it simpler for them to trade. So our target audience is like post college graduate people, right? But Bluelearn community being one of the smartest. college community in the whole India, we thought of sharing this and doing this presentation with the community.
Mohit, would you want to go for the winners? We have the list ready.
Sure, yeah, I think we can announce the list. So,
Okay.
yeah, I don't have a YouTube channel. The session might come soon. I'll just go through these questions very fast. IOL is dropping now because now the demand for paracetamol is not as high as it was back in the pandemic. Options, we are not hiring currently, Somitri, but when we are hiring, will surely drop a message on the Bluelearn community. So we don't compete against these people. We kind of work with them, Nitish, with Zerodha, Grow, and all of these people. As I said, right, neo banks are a layer above the banks. They work with the banks. We are a neo broker. We work with these brokers in the back end. And will Nifty recover in July? Probably, Priyansh, it might recover, but then people are expecting more downturns to come in the markets by the end of the year, around December. Going to adopt in future. Do crypto companies going to be adopted by other companies also in future? Yeah, so crypto as a technology can be adopted by all the other people. Uh, with respect to what happened in IS, who can retain investors, individuals like us can see it as such these operators. Yeah, so yeah, I think information is democratized, right? So people who had the grasp of understanding what was happening with the data actually got saved there, right? In misinformation and all of those things will happen, but I think good research, good analysis is where these things help, and that is what we are also trying to solve for strategy, so that you don't invest in the next Paytm. Um but yeah, I think we can announce the results, Chandan.
Sure, Mohit. So, okay, so the first place is gonna get 2,000 rupees, and the second place 1,000, and the third place followed by rupees 500. So, okay, after a bunch of questions, so this is the list that we all been looking for. Firstly, the first place is okay. Let's start with the third one, the classic scheme though. Number three, third place is by Varun. He's been super extremely active and asking some really good questions in the chat. Congrats, Varun.
Congratulations, Varun.
Guys, can we see a congrats, Varun, in the chat at least? All right, just keep it going. Just keep it going, guys. All right. Okay. So, all right, we are here for the second place is by Tejas Rathod. Congrats, Tejas.
Congrats, Tejas.
All right. So for the first place, the man who has been extremely constant in giving a number of right answers. So, okay, before that, did you like the session? Can I see number 5 in the chat? Just to show your interest in the session. Yeah. Guys, faster. Yep. Okay. So there we go. The first place for the evening goes to, it's for Arpan. So congrats, Arpan. And thank you so much, Radzi, for doing this session.
Congrats, Arpan. Hey, amazing chatting with all of you. Congrats to all the winners. Congrats, Arpan, for coming on the top of this thing. And congrats everyone for having such an amazing conversation with me. And thank you for taking out time. It's been quite late in the night, but tomorrow is a Saturday, so no worries. I think you all will be probably sleeping late.
There's just one last thing. You all can, the winners can message me on Discord. We can do the further proceedings over there.
Awesome. Awesome. Okay. All right. Thank you so much, everyone. Thanks, Chandan. Thank
Chandan,
you,
can you?
Bluelearn community.
Thank you so much, Mohit.
Thank you so much, Mohit. Chandan, can you disclose the answers so that we get to know what we did
Yeah,
wrong.
sure, absolutely. Okay. Okay, how about we
slide-
share a document? How about we share a document in the community? Is that okay? With all the questions
Okay,
and answers.
and is this presentation sendable or it is on the web?
I think Atharva or Mohit should be good to answer this.
Okay, no issues.
Okay. The entire session is recorded and we'll upload it on Bluelearn's website. Okay, thank you so much, guys. You've been great audience. At the same time, we'll be ending the official session now. Firstly, thanks to Stratzy, Mohit and Atharva. You've been great. Mohit, really good presentation. Atharva just aced with selecting people. Awesome. And that's Bluelearn. Thank you so much, guys. Thanks for staying till the very end. See you again.